Something strange is happening. Countries say they want a strong economy, but many of them don't actually want a strong currency. Think about that, because right now, some of the biggest moves in Forex aren't being driven by charts. They're being driven by a silent battle happening behind the scenes, a battle almost nobody is talking about. And if you're trading Forex without seeing it, you're trading blind. For years, Forex traders followed a simple logic: strong economy, strong currency; weak economy, weak currency. Simple. But recently, things haven't been that clean. You've probably noticed it. A country releases decent economic data. The currency falls. A central bank sounds optimistic. The currency barely reacts. Sometimes it even moves the opposite way. It feels irrational, but it isn't, because many countries are facing the same problem right now: slower growth, higher debt, global competition. And when growth becomes harder to find, a strong currency can become a problem, not a solution. First, weaker currencies can help economies grow. This is the part most traders never think about. A weaker currency makes exports cheaper. If you're a foreign buyer, products suddenly cost less. That can boost demand. More exports, more economic activity, more growth. Now imagine you're a country trying to keep factories busy, trying to stay competitive globally, trying to support growth. Suddenly, a super strong currency isn't your best friend anymore. And that's where things get interesting, because central banks rarely come out and say, "We want a weaker currency," but their actions can tell a different story. Second, markets now react to policy expectations, not just policy itself. Years ago, traders focused on rate decisions. Today, markets are trying to predict the next 6 months, maybe even the next year. This creates a problem. A central bank can sound tough, talk about inflation, talk about stability, yet the currency still falls. Why? Because traders aren't listening to what officials are saying today. They're pricing in what they think happens next: future rate cuts, future economic weakness, future policy changes. And that's why Forex reactions feel so confusing lately. You're watching today's headlines. The market is trading tomorrow's expectations. Third, countries are competing for capital at the same time. This is where the real battle begins. Every major economy wants investment. Every major economy wants growth. Every major economy wants capital flowing in. But capital doesn't go everywhere equally. It chases opportunity, returns, stability. So governments and central banks are constantly trying to balance 3 things: economic growth, inflation control, currency stability. The problem? You can't maximize all 3 at once. Something usually has to give, and when it does, Forex moves fast. Let's look at what traders experience. One central bank sounds cautious. Another sounds aggressive. Bond yields shift. Growth expectations change. Suddenly, a currency drops hundreds of pips over several weeks. Not because of one news event, not because of one speech, but because global money started moving elsewhere. That's the part retail traders often miss. Currencies aren't just trading against each other. They're competing for global capital. Every day. Here's the catch. Most traders think they're trading charts. They're not. They're trading incentives. And incentives can change long before the chart makes it obvious. That's why a perfect technical setup can fail. That's why economic data can get ignored. That's why policy comments sometimes create huge volatility and sometimes create none at all. The market isn't asking, what happened today? The market is asking, who looks stronger 6 months from now? And that's a completely different question. So here's what to remember. The next time a currency moves in a way that doesn't make sense, don't just look at the chart. Ask, who benefits from a stronger currency? Who benefits from a weaker one? Where is global capital likely moving? Because some of the biggest Forex trends start long before the headlines explain them. And the traders who understand that shift, stop reacting to the market and start understanding it. If you've noticed currencies behaving differently lately, comment "currency war" below. And if you want more videos that explain what's actually driving Forex beneath the surface, subscribe to MarketsVox, because the biggest moves are often happening where nobody is looking.